In this video, I'm going to talk about an extremely simple entry that will leave you being extremely accurate trading any tradable asset. Maybe this is your consistent missing piece, basically looking for these patterns that I'll show you how to do it without any subjectivity. The best part is you do not need confusing analysis. It's all about recognizing only 4 simple entry steps for you to get the setup. Remember, for this to work, you need to understand all the parts that I'll give you in this video. Everything worth doing requires patience and discipline, and this is what you need for you to master what I'm going to show you shortly. This 4-step entry strategy will work for any tradable asset and will actually work on the M15 time frame, and you need 4 indicators on your charts, and it can be traded on the phone for those who do not have computers, and it has clear targets without any subjectivity of exiting. The mantra is no pattern, no entry. The only thing that will stop you from succeeding using this is yourself. Be disciplined and be consistent on this particular system. You can trade anything of your choice that moves, even weather. So what is the 4-step entry setup? Let me explain. We need EMAs first. By EMAs, I mean exponential moving averages applied to close. You'd find someone asking in the comment section, what are these EMAs? They are basically exponential moving averages applied to close with the following periods that I'll provide you. So basically, we are saying they do not predict the markets for me, but they give out valuable information and expose what the market makers intend to hide from you. All patterns are clearly drawn out when we are using EMAs. So no predicting, but they give us information as well as they clean out the hidden patterns that I'll show you shortly. So the EMAs that you are going to require are basically the 5, the 13, the 50, and the 200 EMA. And in some instances, you also require the 800 EMA that will actually help you to govern where the bias is going to move next. So without further ado, let's jump right over the charts and explain all that you need to do for you to get an entry using this particular trading system. But before we do so, check out my free Telegram channel where I share my knowledge on trading as well as tips as well as setups. I've left the link in the description box below. Alright, so what you are seeing on the charts is basically the EMAs that I've mentioned on the slides. The one in white is the 200, the one in blue is the 50, and the one in red 13, the one in yellow the 5, and the one in dark blue is the 800 EMA. Basically, you might need to repeat this particular part so that you know the EMAs. You may also need the Traders Dynamic Index for confirmations of the particular patterns that we've said. So the first thing is to basically find the market on the H1 time frame, giving us these particular bounces on the 200 EMA, or these can be bounces on the 800 EMA if we are looking at the M15 time frame. So step 1 is to look for points where the market is bounced on the 800 EMA, or basically the bounces of the market on the 200 EMA if we are viewing on the H1 time frame. You can see that here we had this bounce on the 200, another bounce on the 200. So these first steps were basically satisfied. After you see the market bouncing on the 200 EMA, the next thing is that on the M15 time frame, we want to see the market to give us a flow away from that particular bounce. In this particular case, we can see this was a bounce and a flow was issued to the upside. Step 2 is now for you to actually see that bounce locking, and it can be seen by locking if we see a 50 200 EMA cross on this particular M15 time frame. After that, we now need to look for patterns, and patterns must always be taken when they have been issued outside of the Asian session. We do not want patterns that comes within the Asian session, but outside of the Asian session. What are these patterns? These patterns are going to be M's and W patterns meeting the following criteria. So here we can see that there was a crossover of the 50 200 EMA to the upside after a bounce of the market on the 800 EMA of the M15 time frame. After that, we can see that the following day started at this particular point. It's fortunate enough that in my region of trading, my days actually start at the start of the Asian session. Therefore, the Asian session will actually protrude right to 9 a.m. my time, which is basically it will be night for some other people. Then after that, this was going to be my Asian session range, and after that it was going to be somewhere at this particular point, my Asian session range. After that, we want to see a shark fin. Like in this particular instance, we can see the TDI giving us a shark fin. This actually marks the first leg of our pattern, or the first part of our M or W pattern. So a shark fin was issued, which is actually corresponding to this particular point. So this is the point that it is corresponding to, and then we can see that there was a crossover of the 513 for first leg and another crossover of the 513 for second leg. This is basically to remove the subjectivity for each legs. So this was the second leg. After these, 513 to the upside, 513 to the downside, and then we had the second leg. The second leg was right inside the structure, and we actually say whenever we have this scenario, we are saying it is called a divergence scenario. And a divergence scenario shows that the market makers are actually hiding to go to the upside whilst the TDI is telling otherwise. So in this particular case, our entry was going to be at the closure of the candle above the 13, which is at this particular point. This is where we were going to make our entry, and our exit should always be at 2 to 1. What we have risked will be basically a stop loss right below the longest leg. Sometimes the longest leg will be the first leg, sometimes it will be the second leg. So the longest leg is where we put the stop loss below it. So in this particular case, we wanted to have a 2 to 1 reward to risk ratio, and it was actually met. However, on the following day, we can see that at this particular day, we had another beautiful point of entry. We can see, as I've said, we want M's and W's outside the Asian session. We can see that the Asian session started this particular time right to 9 o'clock my time, which was actually around this particular point. And after that, what can we see? We can see that there was a first leg which had a shark fin, although the shark fin was small, but a shark fin was issued corresponding to this particular leg. After that, we can see the crossovers as we want to see them: a crossover to the upside, a crossover to the downside, and a second leg was actually issued at this particular point. And we've said a close above the 50, a close above the 13 is where we want to make an entry. We can see one leg outside, one leg inside, and this was going to be our entry right after the Asian session range was issued and the market went right to the upside like that. If we continue, we can see again at this particular point, we had another pattern, a W pattern that was actually issued with 513 to the upside, 513 to the downside. By 513 to the upside and 513 to the downside, someone may get confused what I really mean. We can see a crossover for the first leg to the upside and another crossover for the second leg to the downside, and then a close above the 13 which was issued at this particular point, and the market went right to the upside like that. So for the steps, we are saying bounce on the 800 if we are looking at the M15 time frame, crossover of the 5200 EMA to the upside for us to actually know the bias. Then after Asian session, we want to see a pattern, and then the last part is actually pattern validation, where we want to see an entry after the pattern has been validated. For you to actually understand much more information about these particular strategies, you need to actually be part of the top 1% traders course students, where I talk much more in terms of these particular trending mode entries. On that note, we've come to the end of our today's video. Thank you for watching. Like and subscribe, and I'll see you in the next one.